Have a tax bill for January 21 and worrying about how you're going to pay it? Well, then this video contains some great news. As a business accountant, my team and I spend all day long helping business owners on their journey. Now, during the coronavirus pandemic, of course, it's been a tough time for many businesses and the government's recognised that. And what they were able to do was say, we're going to delay your tax payments that you may have been due in July 2020 and delay those until the end of January 2021 when all your other tax is due. Now, that's been quite good. A lot of people have used that option. I think what the government's then realised is that what's happened is there's going to be this cliff edge, a very stark cliff edge of when you could potentially have to pay all of your tax that was already due and potentially more upfront in what they call payments on accounts with the way personal tax works. So from that point of view, it could be a very hefty bill, and a lot of businesses haven't really got going. We're still seeing local lockdowns and all these things. So what the government said in the Chancellor's winter economy plan, he announced some pretty good news if this is you in that situation. But before I get into that, if you like this video, make sure to click the subscribe button below so you can get many more just like it. So to get into the detail, to recap, normally you're going to pay your balance in payment. So you earn your profits all year, you pay your tax in January by January the 31st. So in this case, it's going to be January the 31st, 2021. And then if you'd earned over £1,000, and there was some other criteria, but let's just keep it simple. If you earned over £1,000 generally, you're going to pay upfront for next year as well, half of the money. So if you owed £1,200 in January, you're actually going to pay £1,200 for the year plus £600 for next year, and then you'll pay the other £600 for next year upfront in July, and then it keeps rolling around like that. So it can be quite hefty if you're a self-employed person and have to do that. And of course, in this video, I'm mainly talking about self-employed there, but it could be that you're a director of a limited company and you've got some dividend personal tax you've got to pay, or any other self-assessment liability up to £30,000 from that tax return. So I'm going to use it interchangeably, I'm sure, throughout the video, but if you've got tax to pay, this definitely concerns you. So the big news really is that you're going to be able to delay that payment now for another 12 months. So it's actually going to take it in installments right the way around to January 2022. Now that's pretty fantastic, gives you more time to pay, avoids that cliff edge. Now in terms of practicalities, they haven't actually released the details yet of how this, they're calling it a self-service time to pay facility. So I presume it's going to be an online form where you've probably got to go through some criteria and confirm that you match this criteria, and then they're going to give you this auto time to pay arrangement. I think that's pretty cool because currently it's a phone call that you've got to make and speak to somebody and arrange it, and I presume that resource-wise that's going to be difficult for them to manage, so we're presuming in this case that it's going to be an online form. Now what they have said is you're going to be charged interest at 2.6% for the period from the 1st of February, so obviously when it becomes due up until the point that you finish paying those repayments. But obviously if you haven't got the money, a 2.6% interest on that is not going to be vast sums of money, so it's still a fairly cheap way of financing that. Other, if you were thinking of, oh actually, do you know what, I'm going to stick it on my credit card or I'm going to do other things, this is still a very cheap way of spreading those payments. From an action point of view, the one thing I do want you to take away from this video is do not leave your tax return for 2020 to the last minute. So your 1920 tax return, the one quite often referred to as the 2020 tax return for the year ending 5th of April 2020, is due before the 31st of January 2021. So 5th of April 20, tax return due for submission before the 31st of January 2021. And of course, that's the due date of the tax as well. So where people get themselves in a lot of trouble is they wait to the last minute to submit the tax return, then get this surprise tax bill because they didn't know, they didn't keep an eye on it through the year, and that can be a struggle. Now, of course, if you're talking to HMRC about time to pay, I suspect one of the things they're going to want is for that tax return to be in, so it sort of locks in the tax bill that they know they're talking about and confirming. I can't see that they'll be doing it without it. So for now, your action point is to take away is get that tax return done, make sure it's in, and you have a real good idea then of what actual tax that you've got to do this deal on, where you can then spread it over. But either way, I think it's really, really good news. So do keep an eye on further videos, blogs and everything else that we put out, because I'm sure as the details come out of how to actually use the time to pay service, of course, we'll be here to talk about it. That's it for this one. Hope you have a great week, and we'll see you on the next one.